Hello and welcome back to Trading Strategy Testing channel. Here we test the most common trading strategies to see how successful they could be and whether you should follow them while trading your hard-earned money. All the strategies will be tested 100 times so we can see how much money we could make or lose at the end. For a better risk management, we will be using a 1.5 risk to reward ratio, which means for every $1 risked, we could either make $1.5 as a profit or lose $1 if the trade is not successful. Always remember that without proper knowledge about risk management, profitable trading is almost impossible. Our starting capital is $1,000 and we will be trading Euro USD since it is the most traded pair in the market. Before we start, please like and subscribe to our channel in order to encourage us making more testing content, and don't forget to hit the bell icon so you won't miss any new video in future. In our last video where we tested the MACD indicator, one of our subscribers asked us to make a video about the Relative Strength Index, RSI. In this video, we will be testing this popular indicator for 100 times. Again, thank you Nessahra for your request. And as we always say, feel free to suggest any strategy that you want us to test and evaluate in the comment section. The Relative Strength Index, RSI, is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. The indicator was originally developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. The formal interpretation of the RSI indicator suggests that values of 70 or above indicate an overbought or overvalued condition and may be pre-sign of a trend reversal or corrective pullback in price. On the other hand, an RSI reading of 30 or below indicates an oversold or undervalued condition. We will choose to test the strategy on 1 hour time frame. It is important to realize that the longer the time frame, the more reliable the signals being given. As you drill down in time frames, the charts become more polluted with false moves and noise. Ideally, traders should use a longer time frame to define the primary trend of whatever they are trading. The RSI indicator strategy we will test today is simple. We will go long as soon as the RSI indicator gives us a reading below 30, and we will go short once the indicator reaches a value above 70. To set up our stop-loss level, we will use the average true range, ATR, which is a technical analysis indicator that measures market volatility by decomposing the entire range of an asset price for that period. The distance between the entry and the stop-loss level will be equal to 1 ATR. The take-profit level will be set at 1.5 ATR from the entry level. Now it's time to start our strategy testing part, and the results will be shared with you at the end of the video. Kindly like and subscribe to our channel to encourage us making more videos, and feel free to share with us your successful strategy or any setup you want us to test in future in the comment section. We will fast forward the video in order to save time. If you wish to check every single trade, you might reduce the speed of the video. A strategy doesn't need to win all the time to be profitable. Many traders only win 50% to 60% of their trades. However, they make more on their winners than they lose on their losers. Make sure the risk on each trade is limited to a specific percentage of the account and that entry and exit methods are clearly defined and written down. Successful traders have to move fast, but they don't have to think fast. Why? Because they've developed a trading strategy in advance, along with the discipline to stick to that strategy. It is important to follow your formula closely rather than try to chase profits. Don't let your emotions get the best of you and abandon your strategy. There's a mantra among day traders: plan your trade and trade your plan. Once you have a specific set of entry rules, scan through more charts to see if those conditions are generated each day, assuming you want to day trade every day, and more often than not produce a price move in the anticipated direction. If so, you have a potential entry point for a strategy. You'll then need to assess how to exit or sell those trades. Each trading style has its advantages and disadvantages, many depending on your personality. For some, scalping is too fast and too stressful. For some, position trading is too slow and requires too much patience. Find the trading style that suits you, and you will find trading much more enjoyable. Protect your trade from rapid changes in the market by using stop losses. Stop loss orders are a handy tool to protect your trades when prices move against you. You can calculate in advance the maximum loss you are willing to take per trade in case prices move in the opposite direction. This will prevent you from losing more money. Stop losses help prevent larger losses from occurring in a quickly changing market. Stop losses are a great tool for risk management. This tool is offered by most trading platforms. Take profit orders work in much the same way as a stop loss order. The key difference is that a take profit order automatically stops your trade at a preset level to make a profit. Another of our Forex tips to follow is to keep an analysis of your trading activity in a journal. Don't just analyze the trades and the patterns themselves, but also the thinking, assumptions and information behind your decisions to make those trades. When reviewing your work, constantly ask yourself questions about your decision-making. Stop losses prevent large and uncontrollable losses in volatile trades. If you're not using stop losses, it's only a matter of time when a large losing position will get out of control and wipe out most of your trading profits, eventually even your entire account. If you're serious about staying in the game in the long run and growing your trading account, it's necessary to use stop loss orders in every single trade you're taking. Always use stop losses. Stop losses also play a major role in risk management. Depending on their stop loss, traders are calculating what position size to take, how much money to risk on a single trade, how much they're risking on any single dollar they're making, and much more. Feel free to share with me your favorite strategy or indicator in the comments section so I could test it for 100 times. It is important to keep your emotions in check when trading, particularly your level of stress. Make sure you have a clear head and are making informed, rational decisions. Reduce your stress level by finding the cause of your stress and either removing it or reducing its impact on you. This is easier said than done, especially after a spell of losses, but it can prove to be the difference between a successful trader and an unsuccessful one. Risk management will help you in identifying potential risks and avoiding them. We have just finished testing the RSI indicator for 100 times. The entire process took around 2 hours. It is always recommended for new traders to test their new strategies for at least 500 times before jumping into the real account. We have made a total profit of $159.8. The success rate of the strategy is around 45%, which means for every 10 trades made, only 4 of them will end up hitting the take profit point. The strategy, in my opinion, is not that successful. Despite the limited profit made at the end of the strategy test, I believe that the RSI indicator strategy supported by the ATR indicator is not the best way to go. The indicator could indicate an oversold or bought condition, while the price is still continuing on its initial direction. So based on our strategy testing results, I don't advise Nessahra to use this strategy. Well, at least in its current setup. The strategy might need some optimization in order to avoid all the false signals we might encounter while trading. Let's give this video 100 likes so I could share with you my personal trading strategy that I have been using for the past 4 years, and feel free to subscribe to our channel for more strategy testing content. Thank you for watching and happy trading.